Hey guys, I'm Avi and welcome back to my investing channel. In the past month, Tesla price went up around 50%. In the past 4 months, the price went up around 400%. And now the question we must ask, and the question I hear a lot, if Tesla price considered to be a bubble. So those are the topics for this video. First, I will explain what is a bubble, how it happens in the first place, and what makes it deflate. Then I will give a live example by using the dot-com bubble. And finally, I'm going to compare Tesla to other big technology companies to try to get some kind of a price target or to try to evaluate Tesla and decide if her price is a bubble right now or not. So make sure you click on the like button because that helps me a lot to grow the channel and eventually release more quality videos just like that. Okay guys, we've said enough, let's start with the video. A bubble forms when the price grows beyond the true value of the underlying asset. For those of you who do not know, there is a big difference between the value of the underlying asset to the price of the company, which is the price that we pay to buy the shares of the stock. We can consider the value of the underlying asset as the value of which we will get if we sell the company right now. There are many ways to figure what is the true value or the intrinsic value of a company, while there is one way to see what is the price of the company. To see the price, you just write down the ticker and you see the price is TSLA, and then you get the price of Tesla. So when the price gets inflated, gets much higher than what the company actually worth, then we have a bubble. The bubble usually occurs when something changes in the economy or there is some kind of changes with consumption behavior, or when a new product or service introduced to the economy. In our case, we have a combination of both. First, we have a new electric vehicle car with autonomous capabilities, and then we have a transformation between fuel-based energy to electric-based energy, and that transformation is highly supported by governments worldwide. So in other words, we have something different over here. Something different is happening in the overall economy right now. During a bubble, investors are willing to pay high prices for a stock, and they are sure they're going to sell those stocks in even higher price. So an example of a famous bubble that already happened, that's the tech bubble. It's also called the dot-com bubble. It started back in the year of 1990 and it continued 10 years until 2000. In the year of 2000, it started to deflate and the deflation continued until 2002. Between 2000 and 2002, the Nasdaq dropped around 75%, while in the previous 10 years, the Nasdaq went up around 1000%. So during those 2 years when the bubble burst, investors lost around 75% of their total value. And that left them with the stocks which they bought, but with the fair value of the stock. Because back then, people were over-optimistic about the potential of the technology stock. There are many ways to evaluate a company, but none of the ways that we know as investors is an absolute way. There is no way to determine 100% what should be a price of a stock. We can get estimations. And when I consider a company which hadn't got to her breaking even point, which means when I consider a company which hadn't reported a net income yet, and that's Tesla, I will look on her price to sales ratio, which means I will compare her market value to how much revenue the company had managed to generate in the past year. So the ratio is called price to sales, or we can call it market value to sales. Either way, it's the same thing. In Tesla case, the ratio is 9, which means Tesla's market value is 9 times greater than what Tesla actually managed to generate in the past year. Which means Tesla's market value is $240 billion and they managed to generate $26 billion in a 1-year period. Therefore, the price to sales ratio is 9. Now, as a rule of thumb, we should always remember that a new company should have a high price to sales ratio relative to a well-established and mature company. And that's because at the start, people are seeing the potential and they are willing to pay much more than what the company actually worth. We can see that at the beginning, around 8 years ago, Tesla price to sales ratio was around 20. Back then, the price per share was $30. And I'm sure back then people said Tesla is a bubble or Tesla is very expensive, because back then Tesla barely had sales and it was very hard to forecast her potential. We can have another example and have a look on Facebook back in the year 2013. Their price to sales ratio was around 10 and price per share was $50. And I'm sure over here too, people thought that Facebook might be very expensive. So I've asked myself a question. When will be the point that I will tell to myself, okay, Tesla is considered to be expensive, I'm waiting. I know I shouldn't sell Tesla because I see the potential, but there might be a point when investors will get too excited, the price will be inflated, and after the price gets inflated, there comes the correction. So I rather buy in corrections and not when the price is going up. So what should be considered as a fair price to sales ratio for Tesla? Thank you for asking. Let's figure out. So as I said, we will be using the price to sales ratio, and I will be comparing Tesla to other big technology companies which we already know. I'm talking about Facebook, Amazon, Apple, Netflix, Google, and Microsoft. I will get each one of those price to sales ratio, and then I will take an average out of those 6 companies. The average ratio for those 6 companies is 8.2. Now let's put it like that. Like we said before, the greater the ratio is, the more expensive the company is considered to be. And the greater the ratio is, the more investors believe in the potential of the company. Otherwise, they won't be paying that much relative to what the company is capable of selling. So I thought of taking this 8.2 ratio as a benchmark for Tesla and say every time that Tesla's ratio goes below 8.2, well, that's considered to be as a bargain. And every time it's above it, the price might be considered as expensive, but not a bubble. A bubble, like I mentioned before, that when the price gets completely disconnected from the reality or from the fundamentals of the company. And when a bubble occurs, we can expect drop of 60 or 70 or 80% in the price of the stock. I don't see a scenario which Tesla's price drop by 50 or 60%. So like I said, every time the price to sales of Tesla will get above 8.2, you consider it expensive, and less than 8.2, it might consider to be as a bargain. But I don't want to take 8.2 as the benchmark. I would like to take 10, which means I'm giving Tesla a premium. And that's because if I take all those companies I just mentioned and I look on Tesla and then I ask myself, where do I see the most upside with the potential market? I think that Tesla, that's the answer. All of the companies mentioned above, those are growth companies with huge potential. Even though they are already huge companies, they will grow even more. But if we take Tesla's potential market as for example, last year out of the total cars that were sold worldwide, only 5% of them was fully electric vehicle. And still Tesla managed to generate $24 billion. I'm sure you understand where it's going to. By the way, Tesla don't just sell cars. She also has solar energy that she sells, and she has car rental services. Their business model is very diversified and the potential market really in the early stages, and still Tesla managed to sell a lot, and she's really close to the breaking even point. Now back to our case, I said Tesla price to sales ratio, a fair price to sales ratio should be around 10. I believe that the high edge of the price to sales ratio should be around 15. That's when I'm gonna tell myself that's the time to wait. Now if you look on Tesla's revenue, we can see it grew from 11 to 21 to $24 billion between the years 2017 to 2019. Considering the recent report of Tesla and the increasing amount of sales by dollar amount and by unit amount, I believe it's going to be reasonable to forecast that their next revenue amount by the end of 2020 will be around $30 billion. Now when I have the revenue amount and I have the price to sales figure, I can take them both together and get to a forecasted market value amount, which will be $300 billion. Now when we take the forecasted market value amount and we divide it by the total shares outstanding amount, we can get to some kind of a price target, which is around $1,800. That's a price that I'm gonna consider to be fair for Tesla by the end of the year. To be honest, I believe it's gonna get even higher because a price to sales ratio of 10, I consider it to be very fair to conservative. People are talking about the 2000 price target. I see it very reasonable. It might happen. It might take Tesla to the expensive level of Tesla, but that's alright. After the price gets expensive, the stock will sell off. That's how the stock cycle works. And as long as the price to sales will be around 15 to 10, we are not in the bubble area. Now that's my opinion, and of course the numbers are not exact. We're talking about hypothetical ratios, but at least for me it gives some kind of a figure. Where should I aim with Tesla, where should I buy, and where should I hold? Alright guys, I hope you enjoyed this video. If you haven't done so yet, please click on the like button, and if you want more videos like that and you are new to the channel, consider to subscribe. I will see you in my next video.